Flowers Foods just posted a clear top and bottom line miss for Q2 2026. Revenue came in at 1.193 billion, so that's down 4% year over year, and it missed the 1.23 billion consensus. Adjusted EPS hit 21 cents, which missed the 22-cent mark Wall Street was looking for.
Yeah, and the forward-looking numbers are just as rough. Management slashed their full-year 2026 guidance. They're now projecting revenue to drop to, somewhere between 5.07 and 5.142 billion. Adjusted EPS is getting dialed back to a range of 75 to 85 cents.
Right, and the stock reaction was brutal. It gapped down over 4.5% right out of the gate, so it's hovering near its 52-week low. right in that $6.70 to $6.80 range.
It really is a harsh drop. But to understand why a traditionally safe consumer staple stock is suddenly this volatile, we have to look at the underlying mechanics here, specifically pricing versus volume.
Okay, let's get into the segment performance then.
Right, so if you look at their branded retail segment, overall sales fell 3.8%. Now, management actually managed to push pricing and product mix up by 3.8%, obviously trying to offset inflation. But here is the really glaring data point: consumer volume cratered by 7.6%.
It's like stretching a rubber band until it finally snaps. You can keep raising prices, but have we finally found the ceiling on consumer staples pricing power?
It definitely looks like it.
Because budget-constrained shoppers, they're not just accepting it anymore. They're actively migrating to private labels, store brands, or just smaller formats.
Exactly. And that dynamic makes the margin squeeze they're seeing right now incredibly dangerous. In a normal cycle, if commodity costs drop, like, say, wheat getting cheaper, a baker usually gets a nice cushion on their profit margins.
Sure, cheaper inputs should mean better margins.
Right, but despite those cheaper ingredient costs, their adjusted EBITDA margins actually compressed by 180 basis points, down to 9.3%.
Wait, really? If the flour and the yeast are cheaper, why are their margins shrinking? Where's the money going?
It's basically all getting eaten up in operations. Rising labor wages, higher freight costs just to move the product around, and increased marketing spends completely wiped out any of those ingredient savings.
So with pricing power totally exhausted and operational costs rising, how does management stop the bleeding?
Well, they're realizing they can't just hike prices again. So they are pivoting hard into innovation to basically meet the cash-strapped consumer where they are.
By doing what?
They're actually introducing half loaves.
Oh, wow. Half loaves.
Yeah, it hits a much lower, more accessible price point for you at the register. But at the exact same time, they are leaning heavily into premium trends for a totally different demographic.
Right.
So sourdough, extra protein, keto products through brands like Nature's Own and Dave's Killer Bread.
So they're kind of barbelling it, chasing the extreme budget buyer and the premium health buyer at the same time?
Exactly. And alongside that product shift, they are executing a restructuring plan to unlock about $20 million in annualized run rate savings heading into fiscal 2027.
Okay, but here is a fascinating bullish signal in the middle of all this chaos. With volume cratering and a huge restructuring ahead, the CFO just stepped in and bought 5,000 shares on the dip.
Yeah, that is definitely notable. Insider buying is classically seen as a huge vote of confidence. It signals that management thinks the sell-off is overdone.
Right.
But it doesn't erase the massive risks here, mainly execution.
Meaning, can they actually pull this pivot off?
Precisely. Relaunching products, optimizing their network, introducing half loaves that takes time and capital. The danger is whether they can cut costs and roll these out before the volume contraction just becomes a permanent habit for consumers.
Which leaves you with a really fascinating question to ponder. If consumers permanently adopt private label bread just to survive this inflationary cycle, will legacy brands ever win back that shelf space, even with clever new half-loaf innovations?
It's a tough road ahead.
Make sure to follow the show for your daily earnings coverage.